You were not meant to be a slave to the grind. You were not meant to trade your life force for money. You can escape gravity. You can unlock your life. You got this. Let's go.
Hello and welcome to Unlock Your Life. I'm your host, Jenny Smith. Guys, today I'm bringing the heat as we have Hurricane Idalia blowing through Charleston as we're recording. It's already made landfall in Florida. It's coming to Charleston, but I think it's just going to be mostly a rainstorm. So if you're hearing this, it's probably already passed and everything was fine. But today we are talking about, is this the worst time to buy real estate? If you follow real estate at all, you know the rates are up. You know the Fed is crushing commercial real estate because every time they raise the rates, they hurt buying power. There are people that need to refinance. They may be on a maturing loan and they've got to either sell the property to pay off the existing loan or they got to refinance. And instead of the rates being 3 and 4% where you could get a mortgage 2 years ago, now they're at 7 and 8% or more, depending on your situation. And so there's a lot of moaning, there's a lot of complaining, myself included. There's also a lot of fear in the markets, right? Are we on the brink of recession? Are we already in recession? What's going to happen in the future? The Fed printed money like crazy. Now we're struggling with inflation. Cost of living is going up. People are locked into their mortgages. People aren't buying. People aren't selling on the single family side. We're seeing credit card balances rise. We're seeing defaults on car loans and credit card loans going up. We're seeing the debt service coverage ratio, which is the metric they use to determine how much money they'll lend you. We're seeing that get squeezed because now the money is more expensive. What you used to pay 4% is now 8%. So your payment has doubled in some cases on these loans. And so there's a lot of bad news in the market, right? And trust me, they remind you of it, right? So we've got this hurricane going and I don't follow the news. I don't watch the news. And people tell me about it if it's big enough. I walked into the bank this morning and the teller was talking to me all about the hurricane. And before that, I really hadn't paid it a whole lot of attention because I knew it wasn't big enough to evacuate. But the news cycle is a 24/7 fear machine that is going to make you pay attention if they can. And the best way for you to pay attention or for them to get your attention is to say there's a perceived threat. Right? Human beings, we're trained to stay alive, right? Self-preservation. What is the next threat that's threatening my income, threatening my lifestyle, threatening my family, threatening my house, threatening my car? How can I protect myself against that? And they know that you're going to pay attention when they repeat those. So it is ramping up and the crowd is saying this is a bad time in real estate, right? That's what the mantra that we're hearing. You're seeing commercial defaults, and to be clear, I want to clarify this point. I'm talking about multifamily here because that's what I specialize in. That's what I know. I'm not talking about office space in San Francisco, California, but I'm talking about, your run-of-the-mill apartment complexes scattered out throughout the United States. And it's just the herd has moved away, right? We see prices move with simple supply and demand. When the rates were low, there was a lot more demand because you could get money cheap. You could buy stuff on 3-4% interest only loans and you could do your value add or whatever you're going to do. You can hold it just because the market's going crazy and you could sell it and make money. And so these houses were being bid up, or not houses, houses, but also apartment complexes were being bid up, going higher and higher. The sellers were on top of the world, right? It was a seller's market, multiple offers, all cash, hard money day one. It was very, very easy to move a property because there was so much demand of people wanting to get into apartment buildings and wanting to get into, single family homes because they could get attractive debt rates. Okay, so the crowd is saying that's not the case. It's harder to get loans. The rates are higher. We're maybe on a brink of the recession. We don't know what's going to happen. So let's just hold tight. Right? And so that's affecting the market. We're going to get into that in a minute. All right. So before I do that, I want to talk about what happened a little while back. I'm going to take you down memory lane and tell me if you would have bought. Okay. So imagine this scenario. We see the S&P 500, the Dow Jones drop 30-40% in the matter of weeks. we see the news telling us that 3.4% of our population is going to die. Right? You got 350 million people in America, and they're projecting somewhere in 10 to 12 million people are going to die. We're also seeing the government come out and say, hey, you don't have to pay your rent. Hey, you don't have to go to work. We want you to shelter in place. We want you to stay home, don't work. We need to flatten the curve and don't produce anything, and don't worry about your rent because landlords aren't going to be able to kick you out. We're going to put an eviction moratorium. So we're going to protect the people. Is this a time where you're like, man, this is a great time to jump into multifamily? I'm going to go out there and buy an apartment when 3% of the population is about to die, that nobody has to pay their rent, nobody's working, the stock market is down 40%, there's a ton of fear, a ton of uncertainty. I'm going to plunge right headfirst into multifamily. Well, the crowd said, no, I'm not doing that. That is a bad idea. Other people, present company included, I jumped in, right? I jumped into multifamily right then. June 2020, I closed the biggest deal of my life, 208 units for $5.5 million plus a $2.5 million rehab. And it was scary, right? It was definitely hard to close that deal. I was going against the flow. I was going against the grain. I was losing the crowd, leaving the crowd, and plunged into that. Okay? However, if you know anything about the recent history, which I'm sure you do, what happened at the end of 2020, 2021, 2022? Everything turned around, right? We found, 3.4% is not going to die. That's probably inflated. It's probably going to be less than 1%. This isn't as serious as we thought. Okay, we are going to go back to work. We are going to figure out the masks and the social distancing and all that stuff. Stores are going to reopen. People are going to go and make money. People are going to continue to pay their rent. There's going to be people out there that are just like, hey, I'm going to keep my commitment and I'm going to pay my bills, even if I maybe don't have to. And that was a decision that I made, right? I got offered, I don't remember the term, but banks were offering forbearance where they were saying, hey, you don't have to pay your federally backed mortgage if you need time off and blah, blah, blah. And we looked at that option and we're like, well, people are still paying us, so we might as well keep paying these banks, because if you don't pay banks, eventually it isn't good. So let's stick to the plan and keep on paying these banks. And so we did. All through COVID, we made our mortgage payments. We didn't take the forbearance. We didn't get into an issue with that. And by and large, we stayed ahead of it with the tenants. We communicated. We worked with people as we needed to. Most people continued to pay. And we were able to evict. Eventually, we were able to evict. Eventually, we were able to get out the bad apples that weren't paying, that long after all the stimuluses and all the stuff was over, they still weren't paying. We were able to get them out. And all of a sudden, 2021, 2022, and even 2023, we're seeing values way higher, right? Especially in single family homes, in multifamily, across the board for real estate, other than maybe office space. And I don't know what is going to happen there because I'm not a pro or expert at that. But the point I'm trying to make is the crowd is often wrong and maybe even always wrong, right? Because the crowd is a lagging indicator of what's happening. And the smart money and the people that really know these industries and have inside information have already moved by the time the crowd is moving. And so I want you to think about, are you following the crowd? And if you are following the crowd, are you making the right decision, right? Because we know there are bull and bear markets, right? The stock market goes up and it's euphoric. It's going to go up forever. We're going to go, another $20,000 and the Dow Jones is never going to stop, right? We see it with cryptocurrency. That thing exploded in 2020, 2021, and everybody was euphoric about where it was going. We saw it with real estate in 2021, 2022. We saw prices just breaking records. People paying unheard of before prices for homes, for apartment complexes, prices per unit, just going through the roof. But what goes up must come down. And then when we're in bear markets, people think the same thing. It's going to continue to go down forever. Things are going to get worse and worse and worse, and we're never going to get out of this. And that's because markets are driven by human emotion. All markets, stock market, crypto markets, real estate markets, any markets that you can think of is driven by a human emotion factor. And typically, we figure it out. Typically, what goes down also comes back up. And so I want you to think about the situation we're in right now. Okay, so sentiment on real estate is down. People are in the same sort of scenario that they were in COVID. And COVID is a really unique example because it was such a clear-cut blip. There was only about 6 months where people were really down on real estate. And then it was like, oh, it's going to be okay. And boom, took back off again. The situation we're now is, I don't think, as short of a cycle. But it is a cycle. This world is cycles. Everything is a cycle. And what goes up must come down. What goes down must come up. And so the sentiment right now is real estate is not the best place to go right now because the rates are high, because we overinflated the market, because we might be on the brink of recession. All those things that I talked about, why this is the worst time to be buying real estate. You're paying double for your debt than you were 2 years ago. The Fed raised rates 400 basis points over 15 months. We're at the highest rates we've seen in over 20 years. It is definitely not a bullish market or bullish time where everyone's like, I'm plowing everything I got into real estate. And we're seeing this even on assumption loans. If you're not familiar with an assumption loan, there are a type of loan, mostly agency debt, where you can go to a bank and they'll lock you in for a 10-year loan at usually a 30-year amortization, decent rate, and that loan can be transferred. So typically on a single family loan, you can't transfer your loan. They got to go get a new loan. But in commercial, some loans are transferable. A lot of loans are actually transferable. And so if I have a loan on, let's just use the example, Tulsa, Oklahoma, for $9.5 million, and it's fixed at 4.2% for 10 years, and I'm 1 year in, then that buyer is insulated from the debt markets. He or she doesn't have to go out and get an 8% loan. They can just assume my loan at 4%. So you would think, well, that's not going to affect the prices of assumption deals at all. But that's not the case, right? The market doesn't care what you think. The market doesn't care what's logical or what's not logical. And we're seeing that sentiment dragging down prices even on properties that you can assume good debt on, that are essentially the same scenario as they were 2 years ago. How does that make any sense? Because it's emotion driven, right? Then you also have prices coming down on non-assumption loans. This is more logical. So you have a property that you want to buy and you have to go out and get a loan. And if you get an agency loan, it's 7%. If you go with a local bank, it's 7.5% to 8% or higher. And so you're paying more in debt, right? And because your debt service is higher, your cash flow is less, you cannot pay as much for that property, or you can't get as big of a loan, so you have to bring more capital down, and that lowers the returns overall to everybody. So this is a bad thing. Therefore, there's less demand. Therefore, the prices are adjusting. They're coming down. Sellers are becoming more reasonable. We talked about all cash offers flying in with phenomenal terms. That's not happening anymore. And so because that's not happening, sellers are more reasonable. Hey, I'll lower the price. Hey, I'll help you with the loan. I'll finance the loan at 5% if you buy this. I'll give you, I'll stay in the deal and give you part of the down payment. I'll co-invest with you some of my profits into the deal so you don't have to raise as much capital. All these kind of things that were unheard of 2 years ago are now back on the table. What you need to remember here is date the rate, marry the price. We've talked about this. And right now, the prices are going down. And what was the problem in 2021, in 2020, into 2020 and 2022 is people were marrying that rate. They were looking at the property, not paying attention to the price and looking at the payment, right? Looking at the payment just like they're going out and buying a brand new Cadillac. Well, what's the payment? Can I afford the payment? And the payment looked great, 3% interest only for 24 months. And in 24 months, you'll be stabilized, you'll be worth so much more. You can refinance it into permanent debt and you're going to be golden. And so they were marrying the rate, not really worrying about the price, but that price, that big ugly price, that high price that cannot be changed is still there, staring them in the face. So your basis in a project can never be changed. This is what's so powerful right now that I think the crowd is missing. The crowd is focused on the rates. The crowd is not focused on the price per door, the sticks and bricks. Am I getting a good value? Am I buying a unit for $60,000 a door that I can rent for $800, $900, and maybe over the next 10 years I can get it to $1,000 or $1,100? Who knows where I can go with this thing? They're also not thinking about, well, what if the rates come down? Now, I don't want to be a prophet and say I know what I'm talking about and I have a crystal ball and I've got Jerome Powell in my pocket. I wish. But the rates may come down. And if they do, that's going to add significant value to these properties, because when those rates come down, boom, it's risk on. The market will respond to that. The buyers will come back. It will become a seller's market. Prices will go back up. And this is going to happen in the single family market. This is going to happen in the multifamily market. So we don't know, right? But think back to COVID. March 2020, we didn't know either. And if all of the doomsday scenarios of 12 million people are going to die, businesses are going to be shut down and shuttered, the government's going to exhaust all its resources, we're going to print the dollar into oblivion, this is horrific, this is going to be like the Spanish plague, this is going to be worse than the Black Plague of Europe. I mean, like, those were the things that were recycled and cycled through our brain through the news. And there were some that thought optimistically. They thought, well, maybe we're going to figure this out. Maybe they're going to, figure out a vaccine. Maybe they're going to figure out a cure. Maybe they're going to figure out ways to social distance. And maybe they're going to open businesses back up. Maybe they're going to, print some money, but maybe we'll have a soft landing. There were people that were optimistic about the situation, even in the depths of despair of March, April, May, June. Now, they look pretty smart. At the time, the pessimists look smart. Pessimists look smart, but optimists get wealthy. Right now, we're in the same situation. Pessimists are saying we're on the brink of recession. We're on the brink of this is the new normal. Rates will always be 8%. Rates will, they're going to go up to the 10, 12, 14% like the 70s. Who knows what's going to happen? Like, you got to be careful. You got to protect. And that is all maybe true, right? There's a grain of truth in that, and we don't know what's going to happen. But what I would propose is maybe the rates are going to stay the same. Maybe they're going to go down. Maybe if you lock in a long enough time frame, like 5 years, 7 years, 10 years, you will have improved your property well enough that even if the rates do go up, you're still going to be okay. And eventually, this thing is going to change. I'm optimistic, right? I'm always going to be optimistic. And people may say, well, Jennings, you're foolish. If you think the rates are going to come back down anytime soon, you're foolish. And I get that, right? And I'm putting it out there as at the risk of sounding stupid, sounding foolish, and sounding like a, Pollyanna, that everything's going to be fine. But I know there's an election coming. I know that these politicians don't want the rates here. I know that the Fed, every time they raise rates, it makes it more difficult for the United States government to pay that debt back. I know that, as they raise rates and make the US dollar more expensive, it hurts our dominance for the dollar. And I know that the market likes the rates to be around 5%. When they drop below 5%, the market gets overheated. When they go above 5%, the market gets too sluggish. So I know that equilibrium over the last 50 years is probably where we're going to end back up. I don't know when. I don't know how long that'll take. So the best thing I can do is get the longest term debt I can. Because if I have long-term debt and things get better, then I can refinance. If I have long-term debt and things don't get better, then I can stay in the loan I have because there are no better options. And I have time to improve my property. I have time for inflation to work for me. I have time to do my renovations and get my rent rolls up, get my expenses down, get my valuations there. So even in 7 years, if the rates are higher, but I'm still $100 or $200 more in rent because 7 years have gone by, right? So I'm seeing that, I'm thinking about that holistically and being optimistic. A couple other things to be optimistic right now about the market right now are there has never been easier deal flow. I'm on all these mailing lists, Crexy, Reonomy, LoopNet, blah, blah, blah. There's so many deals being sent out by brokers. Assumption loans, hey, price reduced, seller will finance, on and on and on. And it's slow, but it's coming, right? For the first year, back into 2022, into 2023, I think sellers were spoiled. They didn't believe that the rates were here and that it was really going to affect their property. They were looking at what their values were a year ago and they couldn't stomach selling it for millions less. Now, maybe they're in a bridge loan. Maybe they're in a maturing loan. The bank is knocking. They're saying, hey, you got to do something here. You got to sell this thing. You got to refinance this thing. Like, you don't have time to wait and to wait for that great price. You have to move with intention. And whether that means you're breaking even or you're losing money doesn't matter so much anymore because the demand just isn't there. And so the sellers have come down, and probably will continue to come down until there's a pivot with the Fed. And then when there's a pivot with the Fed, guess what the crowd's going to do? It's going to rush in. And guess what? It's going to be too late, right? Conditions are going to become much, much harder to buy. Prices are going to go up. Now you're going to be trying to marry the rate again instead of marrying the price. And so this window of time is here. I don't know for how long, but I know it's here. And if we can capitalize on this and go against the crowd once again, to say everybody else is scared, everybody else is thinking that, there is no end in sight and the Fed is going to raise rates into oblivion and nobody's going to be able to pay their rent, and on and on and on. The series of imaginary horribles that could happen, the pessimistic talking heads that are getting ratings and wanting to sound smart, they're actually hurting you. They're driving you into the crowd, and the crowd is always wrong. Chaos brings opportunity. We're in a chaotic time. We've never seen this happen before. We have never seen rates go up 400 basis points in 15 months. We've never seen rates like this in the last 20 years. We are in a period of chaos. So you can choose to focus on the chaos, the negativity, the rates, the cost of debt, or you can focus on, wait a minute, what opportunities are here? There's a lot more motivated sellers. There's a lot better prices out here. There's a lot more opportunity. And if I can do something that is a safe deal, that makes sense, that cash flows at a 7 or 8% rate, and I can lock that in for a decent amount of time, then I'm going to make a calculated bet that I'm going to be okay, right? And I'm going to embrace that chaos because that's where the opportunity is. Or you say, well, I'm just going to sit on the sidelines and I'm going to wait. And I see this with a lot of homeowners. People that want to buy a house and like, well, I just can't buy a house right now because the rates are too high. I can't afford the payment. And I'm just going to wait for the rates to go down. Are they thinking? Because that's crowd think. That's group think. If you just think logically, what is going to happen to housing prices when the rates come down? They're going to go up. They're going to go up. We've reset to a new level. People are coming off that a little bit. But as soon as the Fed starts pivoting and pushing rates back down, those prices are going to go up. And now all of a sudden, yeah, the payment is maybe a little bit better. The rate is a little bit better, but now they're paying $100,000 more for the house. If the rates drop by even 1%, housing prices are going to jump by 10 to 20%. That's coming. And some see it, some don't. The same thing with commercial real estate. If you get into something and they never lower the rates and you have long-term debt, you're still going to be okay as long as you bought at a good price and you bought a good deal. But if they lower rates, you're going to have instant equity created by the Federal Reserve, without you really even having to do anything. And that's a powerful position to put yourself in where you're making a calculated decision that I don't think this is going to continue forever. I think we will have another bull cycle. I think that this is going to change. I think that we're going to come into another election. And I think that the politicians are going to pressure the Fed. And I think the Fed is going to say, okay, enough is enough. We don't want to drive us in too deep into a recession. Let's bump those rates down. Let's bump them down. Let's bump them down. Okay, wow, we got to pour jet fuel. Let's bump them down. Like, it can happen very, very quickly. But by the time it happens, it's too late. Going back to the stock market example, when you hear the whispers, the rumors of, oh, this pharmaceutical company, maybe they're going to get a patent approved. That's when you have to act. And maybe they get it approved and maybe they don't. But once they get it approved, boom, that price is shooting up and it's too late. And now you're buying the top. You're buying the overinflated value and hoping that it'll go on further. Most of the time it doesn't. And so if you don't have the foresight, the knowledge, the skills, and the optimism to make your move on the rumor, then you're going to miss out on the news, because by the time the news hits, it's too late. So I want you to think about that. Following the crowd is typically going to lead you wrong. And the nice thing is you can find deals that still make sense with the rates where they're at. In 2022, example, in 2022, the market was super, super hot. People were paying insane prices. And I wasn't really buying much. I was trying, but I wasn't buying much. But a deal came to me, 34 units for $40,000 a door. They were rented at $650, and we could get them to $800. We got our debt at, I think, 5%, and that turned into a great deal. So even though the market was hot, I was still able to find something that made sense. And it's the same sort of thing today. You can find deals that make sense with the debt, and then you're kind of like getting, I don't want to say worst case scenario debt, because who knows what the future holds, but you're getting a pretty bad rate. And it's more than likely going to improve from there over the next 5 to 7 to 10 years if you can lock in that timeline. And so then you have the option to refinance if you want to, but you also have the option, hey, I just need to hold and see what happens over the next 5 to 7 years. And even if the rates don't go down, I'm okay. Even if the rates go up, I've improved the property, I've raised rents over the last 7 years, I've paid down some of my mortgage, I'm still in an equitable position. But those underwritings are not going to look glorious, right? They're going to look like, wow, we're covering our debt, we've got a little bit of extra cash flow, but it's nothing sexy. Those are the kind of deals that if you can find them, they work. The other kind of deals that you can find right now are people that are in a tough spot. Talking to another deal room member, I'm going to leave out some of the details because the deal isn't finalized yet, but it's a large complex, multi-hundreds of units. And these people are in trouble. Their occupancy is down to 25%. The lender is knocking at their door, and they don't have a way to fix it. Their property manager went bankrupt, quit on them. They're not really a multifamily company. They're based in another business and really have no business being in multifamily. And so this is an opportunity where they can step in, join part of the operating agreement. They've got a pretty low debt basis. They can inject a few $1 million, stabilize the deal, and then even at where the rates are and where the valuations are, they're still way in the black. Right? Those kind of deals come along because people are in trouble, because they didn't manage the property well. They've got expiring debt. They've got lenders breathing down their neck. And this is happening more and more and more. Right? So if you can find those type of people and find those type of opportunities where you're helping them get out of a problem, solve a problem because they're partnering with them, and you're also helping yourself, and you're also protecting yourself and insulating yourself from all the risks, because it is real. So guys, if you want to take advantage of this opportunity, the first step is you've got to learn how to do this. You've got to learn underwriting. You've got to learn markets. You've got to build relationships with brokers. You've got to build relationships with banks. You've got to build relationships with investors and loan sponsors. And if this is something that you want to do, that's why the deal room was created. You can reach out to me, shoot me a DM, whatever, and we can chat about it. I'll get on a call with you and talk to you about it if you like. If you're not quite there yet, still shoot me a DM and I'll send you my underwriting spreadsheet, the tool I use to analyze all these deals and buy them. I'll also send you like 8 or 9 videos on how to use that analyzer so you're not just lost in the dark. But this is an opportunity here. Don't waste it. I don't know when it's going to be over, but I do know that it's not always going to be like this. So guys, spend some time, invest in those skills so that you can take advantage of the opportunities that are here and are continuing to come. And make sure you unlock your life. All right, guys, have a great week. Talk soon. Peace.
This is the podcastfactory.com.